but $100 to knock off 9 years of payments, that $100 a month might have just saved you $100,000. Hey guys, welcome back. And today we're going to talk about mortgage refinance tips for success. So if you want to make sure that you don't spend too much money to refinance, or maybe you shouldn't even refinance at all, to find out if it's right for you, stay tuned to the end of this video. A lot of people are hearing that it's a good time to refinance. Well, it is for some people, but not for everybody. So make sure to stay tuned to the end of this video because I am going to talk to you about all the tips to make sure that your refinance is a success. Did you know that choosing the wrong refinance could cost you tens of thousands of dollars over the life of your loan when you thought the intention was to save money? Well, stay tuned to the end of this video so I can share with you all of my refinance tips for success. For your one-stop shop for anything mortgage education, please subscribe to the channel, hit the bell to be notified every Tuesday and Saturday when I post new videos. This is your one-stop shop for everything mortgage. My name is Stephanie Weeks and I'm a loan officer that's been recognized as the top 1% in the nation of loan officers for loan production. There's over 300,000 loan officers out there to choose from. I have helped thousands of customers with millions and millions and millions of dollars in mortgages, maybe even billions at this point. Imagine using these tips with this refinance video to save over $80,000. Oh my gosh, $80,000. Well, that's what happened with one of my clients who used one of these methods that I'm going to share with you today. My first tip for your mortgage refinance success is as follows. Know your plans with the home. Let me elaborate. I actually ran some numbers for a customer today. So let's say that if you called your loan officer and you said, hey, I want to refinance. What does that look like for me? The loan officer said, well, it'll save you $200 a month. We're going to drop your interest rate by whatever percentage. Does that sound good to you? And you say, of course, oh my God, $200 a month is a lot of money. Well, the next question you want to ask is, how much is it going to cost me to refinance? And that example is around $4,000, okay? So saving $200 a month, spending around $4,000 to refinance. Still sounding not too bad, right? Well, you're able to roll in, for that client was able to roll in those closing costs into the loan. But there were some questions missing, right? You can't stop there. So I asked the client, how long do you plan to live in the home? He said, well, I'm going to be selling in 5 years or less. Okay, well, that's an important factor. So I looked up his amortization schedule in his current loan, put together an amortization schedule for the potential refinance, and even though he was saving $200 a month and dropping his interest rate, I believe it was like 1.5%, the fact that he was going to be selling in just a few years, he actually would be no further ahead because he would owe money. He would owe more money at that mark when he went to sell the house on the refinance compared to what he would owe on the amortization schedule on his current mortgage loan. Now, for him, even though $200 a month is a lot of money and 1.5% interest drop is a big deal on your rate, guess what? It made no sense for him at all. It would have cost him money if he sold in 2 years, as an example. So you want to make sure you're looking at your cost versus break even and your long-term and short-term savings. Got a checklist for that you can check out later to kind of help you with that even further information. So you need to know your plans for the home. Are you going to sell in however many years? Are you going to not sell it, but you plan to pay off the mortgage? That's going to make a difference. Are you going to keep the home and convert it to a rental later? That's going to make a difference. Are you going to keep it forever? That's going to make a difference, right? So you need to know for sure your plans with this home. And now life is going to change and nobody knows what tomorrow brings, right? But you have to have an idea. If you think this is your forever home, that's one thing. If you think you're going to sell in a couple years, that's another. So don't forget to bring that up and take that into consideration when you are looking to see if a refinance is right for you. My next tip for refinancing. Make sure you know there's multiple terms available to you, right? A lot of borrowers assume 30 years and a lot of loan officers assume that they want to go 30 years. So don't forget there are 10, 15, 20, 25, and 30-year loans that are available to qualified borrowers. And you want to consider your goals in refinancing. Is it to save interest long term? Is it to save monthly payment? Is it to pay the home off in a quicker period of time? What's the plan, right? So just helped a client today that had a 30-year loan, but they had paid in for 2 years. So they had 28 years left on that loan. Well, one little tip that people don't realize is the shorter the term that you get, the better the interest rate typically, and the lower the mortgage insurance. Well, that means that those two things can contribute to a lower payment, right? That makes total sense. So they called in thinking, let me look at, I've already paid in for a year or 2 years. I hate to go back 2 more years, but let me look at a 30-year loan. And I said, sure, let's look at the 30-year loan, but let's also look at maybe 25 and look at 20. So for them, what they discovered was that they could go from 29 years left on their 30-year mortgage, refinance to a new 20-year mortgage. The mortgage insurance will drop off faster. The mortgage insurance is cheaper. It allowed me to lower their interest rate even further. And they knocked off, oh my gosh, 9 years from their mortgage. And the payment only went up $100 a month. I mean, don't get me wrong, $100 is a lot of money, but $100 to knock off 9 years of payments, that $100 a month might have just saved you $100,000. So, tip number 2, make sure you know your plans and what your goals are for that refinance. Refinancing tip number 3, know what you're getting. What type of loan are you being quoted? What type of interest rate? Do you have mortgage insurance? Is the mortgage insurance for the life of the loan? Does the mortgage insurance have the opportunity to be removed when you have 20% equity? Those things all make a difference for you. So make sure that you know what you're being quoted and what you're getting. There are some times where you might have a rate that's 4.5% and everything is so peachy, it seems amazing. Now you're going to get this 3% rate. It's a huge, huge difference. But maybe you're going from conventional to FHA. Maybe you were 5 years into your loan and your mortgage insurance was about to fall off at $120 a month. And now you're refinancing to a loan that has mortgage insurance for the life of the loan. If you be sure to look at what your loan type is that you're being quoted, and you be sure to look at those details and compare it to your plans and compare it to your current loan, you may discover that even though things seem amazing, it might not even be as it appears. Refinance tip number 4. Make sure you provide accurate information. Did you know that if you provide inaccurate information, your loan could be denied and you might not even get your refinance? That would suck. You know it would. I know it would, right? So don't forget to tell your loan officer all of your details in great detail with accuracy. If you make $60,000 a year, tell them you make $60,000 a year. If you make 58, tell them you make 58. Don't round up to 60. That could make a difference in the approval. So clear, accurate information makes all the difference in the world to the approval, and that approval makes all the difference in the world to the cost, which makes all the difference in the world to the rate, which affects the cost versus break even and long and short-term savings of that refinance. So my next tip is be detailed, be accurate, don't give generic information, don't round up ever. If you've been on your job for 2 years, say 2 years. If you've been on your job for 18 months, don't say 2 years. Be detailed. Your next refinance tip for success is, do you know what you're paying for? Are you paying points in this particular example? There are options with points, buying down the interest rate, and there are options without points. Make sure that you're not getting super excited about that interest rate and not actually getting what you're expecting. And what I mean by that is you may be getting quoted and all excited about an interest rate, but not realize it's costing you thousands of dollars in points, which is going to take your cost versus break even longer. And points are only good in certain situations from borrower to borrower. So make sure that you know, am I paying points or not? And what difference will that make on my choices? Your next mortgage refinance tip for success. Borrow as little as you can. So what do I mean by that? Let's say that you owe $100,000 on your mortgage. And let's say that closing costs are $4,000. And let's say that to set up a new escrow account it's another $2,000, right? So that's $106,000. Well, if it's not a big deal to you to bring money to closing, and you can afford to pay those closing costs in cash and the prepaids in this example, you would bring $6,000 to closing, keep your loan amount at $100,000 to see the impact of the biggest savings possible by not overfinancing. What most people do, they take their payoff plus their closing cost plus their prepaid items and they roll that all into the new loan. And that's absolutely fine. It is your personal preference and also depends on all your goals and everything. But my next tip is if you can ever borrow less, then do. It's going to increase that long-term savings for you. And you know what? It's not an all or nothing thing. It does depend on your loan to value. It does depend on your appraisal, right? But what I mean by it's not an all or nothing thing is, let's say that there's plenty of equity that you could choose to finance 106 or you could choose to finance 100,000 in my example. Well, maybe you can come up with 2,000. That's not a big deal for you. Then finance 104 and bring that extra 2,000 to closing. That'll help you have the most successful refinance with the biggest savings for your budget. Here is my ultimate #1 mortgage refinance tip. Review your documents. So we've gotten to the point where so many things are DocuSign. They're electronic signature. And you know what happens with that? A lot of times we're not really reading as much as we should be. And it can make all the difference in the world. So please make sure to review your documents. And I mean from the initial set of disclosures in that refinance and all through the process. I'm going to give you a few examples. I have a lot. Okay, so a few examples. #1, there was a customer who was really frustrated with their loan officer because they were halfway through a refinance and they realized that the loan officer had the wrong employer. They had changed jobs 3 months ago. Okay, well, here's the thing. The loan officer pulled their old application because they had done the loan with them in the past, okay? But at fault, the loan officer for not reviewing where they work. Yes, we're all human. And also at fault and also human is that borrower who signed his loan application and didn't even read to correct that he doesn't even work at that place anymore. Well, guess what? If his pay's different, his loan might not approve anymore. That's a huge deal. It can make a big difference. So review your documentation. Here's another example. 5 times this week. 1, 2, 3, 4, 5. 5 times this week. I discussed refinances with people and they had no idea what they were getting. They thought they knew what they were getting, but they didn't. Freaking frustrating, right? Frustrating to me as a loan officer and should be really frustrating to the customer, but they may never even know that it ever happened if they don't pay attention and review their documents. It's easy to be confused. There's a lot of documentation when you're refinancing or financing any type of mortgage. So make sure you're reviewing it. So in these 5 examples, 5 times in 1 week, that's just what came across my desk. What's out there and not being reviewed, right? So 5 times in 1 week, the customer thought that they were getting a rate and they were not paying points for that rate. And when they sent me their documents to review for a second opinion, in all 5 instances, when they thought they were paying no points, they were paying a point. And the smallest loan amount was $250,000, the highest being $400,000. That's $2,500 to $4,000 in these examples that they were paying in points and they thought they weren't. And if they accurately review all the documentation, they could catch that. Be really diligent. It's your money. You're going to have to repay it. So I want you to get the best deal possible and know what it is that you're getting. I'm going to move on to another example. Okay. 3 times this week, there were clients who sent me their paperwork to review for a second opinion, and they thought that their interest rates were locked in. In these 3 examples, they had signed a form that said their rate was not yet locked. Why do you care? Because rates change every day. I'm going to say that again because it sounded funny. Rates change every day, and sometimes multiple times a day. So if your rate is not locked in, you don't have the rate that you think. Guess what? Make sure you review your documentation. Another example. Through verbal communication, multiple times, people are thinking that they are refinancing and they are coming to closing with no money. But when the paperwork comes out, they're actually required to bring money to the table, and they were not expecting that. So if you review your loan estimate along with your fees worksheet, and a third spot you can check is page 4 of your application under details of transaction, that is where you're going to see how much you're borrowing, what are you paying in closing cost, what are you paying in prepaid items, what is your estimated payoff, how much are you paying in points, if any, and how much you're coming to closing with. Again, review your documentation and know what you're getting. It's a very, very big deal. You don't want to surprise at closing and go, oh my God, why do I need this amount of money? I did not expect this, right? I don't want that to happen to you. So review your documentation. I'm going to keep going with some more examples if you're hanging in there with me, but I think it's just all very important information because you don't know what you don't know. And I see so many decisions that are made incorrectly or mistakenly because consumers are human. They don't look at this stuff every day like we do as loan officers, right? And as hard as the government has tried in making the documentation user-friendly, it's still a lot and it's still overwhelming and it can still be confusing. So I want to continue with more examples so I can make sure that you have mortgage peace throughout your refinance process. Apparently I can't talk today. My next tip. Did you know that if you look on your mortgage statement or you pull your credit report, you will see how much you owe on your home? Sounds simple, right? But did you know that your payoff is not your balance? And did you know that your payoff is 99% of the time higher than your balance? Let me explain. You pay your mortgage in arrears. What does that mean? If you pay your mortgage for May 1st, you are paying interest for the month of April. So if you pay your mortgage May 1st and you are refinancing and you're paying off that mortgage May 20th, your payoff is the balance that you see on one of those documents I mentioned, plus 20 days of interest. So if you're looking at your loan documentation to refinance and you notice that your payoff figure, payoff estimate, is the same as what is being reflected on your credit report, because you'll see that, right? You'll talk about that. You might have your credit card, you might have your credit app to see that. You have your monthly mortgage statement where you can see that. So if your statement and or credit report has a balance and your documentation have that same balance and not an inflated balance, that payoff is very likely incorrect, which means that either the cash that you need to close is incorrect or your loan amount's incorrect if you decided to raise it to not have cash to close. I see that all of the time. That difference in the that difference in the payoff, which could be the difference in the loan amount and or cash to close, can also make a difference in the monthly payment if you choose to roll it in. So again, details, details, details. Review your paperwork. Know what you're looking at. I don't want you to learn about loans completely because it's not what you do and it can be boring and blah, blah, blah. But this is your money and it's a lot of money. So I want you to have as much information as you possibly can. So that's it. I hope the tips have been helpful and I hope that you have enjoyed the information. I hope that this gives you opportunity for mortgage peace moving forward and that you get to save tons of money because you know what you're looking at on your documentation. You know what you're getting for your mortgage. You know if you should or shouldn't refinance by using the checklist and the material provided in these videos. So happy mortgaging. Do me a favor, type yes in the comments below if you've refinanced a home before. Help me out here. Type peace in the comments below if this video has been helpful. If you'd like more information to go along with this topic or feel like you're still not really sure if a refinance is for you, download my checklist. I'm going to drop the link below. The checklist is basically the cost versus savings versus break even. It's going to help you calculate the cost versus savings versus break even to figure out if a refinance is good for you. And that checklist is free. Just click the button below. I hope you've enjoyed this video. For more videos on these topics, please check out this video or that video and join me for more information. And if you want to connect on social, shoot me a DM. My Insta handle is _the real Stephanie Weeks.